And welcome back to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all our great podcasts at americastalking.com. We are recording today's episode on Thursday, March 23rd. And joining me, as always, is my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, Fed Chairman Jerome Powell on Wednesday stepped to the podium. I believe he was elevated. Otherwise, it would be a lectern. And said, hey, we're going to raise the prime borrowing rate by a quarter point. So I think that we felt like this. We knew this was coming. I felt like this is in the range of expectations. Inflation continues to grow, and the Fed continues to pull down on the lever. Market yesterday, very unhappy with this decision. Market today, as I said, we're recording this on the 23rd of March. Market today seems to be a little bit more upbeat. What's your take on the events of the last 24 hours? What's going on with the Fed?
Yeah, the Fed raises key policy rate by a quarter point in an effort to curb inflation. Look, inflation is still, the Fed's preferred inflation measure, PC price index, was still 5.4% last month. And core PCE was 4.7%. And so far off the Fed's 2% target. So yeah, although disinflation is underway, and so inflation is coming down, it's still far off from the Fed's target. And so it makes sense that the Fed would continue to raise interest rates because ultimately the enemy is inflation. With that said, the Fed has to be very worried, very concerned about the recent stress to the banking sector. And at the same time, it has to start to worry a little bit about the fact that it did raise interest rates almost 5 percentage points in less than a year, and that there's a lag on the impact that monetary policy will have on the U.S. economy. So, yeah, I wouldn't want to be the Fed right now. This is a hard job to kind of balance the inflation issues, price stability, but also the possibility that the financial sector might be in trouble.
So we have not had a Fed target rate, in this range since July 2006, based on a chart from the Federal Reserve Bank in New York. A year ago today, so again, we're taping this on the 23rd. A year ago today, the rate was 0.38%.
Yeah, that's right. It's a big increase. It's the largest increase since the 1970s. And that's because we haven't had inflation, a surge like we've had since the 1970s. And so it makes sense. It makes sense. The good news, though, is what I learned was that first, disinflation's on the way. That's good news. But what I heard at the Powell press conference yesterday was that he actually acknowledged that the recent trauma to the financial sector might have been equivalent to a rate hike, and that it's disinflationary. It's causing some credit tightening, right? Banks are pulling back on lending, and, banks concerned about liquidity, right? Being able to give money back to their depositors are pulling back on lending. And so these tighter financial conditions could end up slowing down the U.S. economy and bringing inflation down. Right. And so the fact that he acknowledged that means that perhaps he believes that disinflation, that the Fed may not have to raise rates all that much more in order to bring inflation down to the 2% target. In fact, I think he said something that was really interesting. He said, future policy decisions will likely depend on the significance and duration of these tighter conditions. So he's really leaving the door open. He's saying, look, on one hand, if credit tightening is not as large as we think it's going to be, and if it doesn't slow down inflation as much as we think it will, we'll have to have, a few more rate hikes. But if this event is disinflationary, as the economic research has shown that historically these types of events are disinflationary, then maybe the job could be done. And so, he's left the door open. The fact that he acknowledged that tighter lending condition would weigh on economic activity and could end up doing the job for the Fed, I think is a good sign.
and this is from Jeff Cox's story at CNBC. I believe the story came out late in the day yesterday or early today. Was this quote from the Fed? Excuse me, this is like from the committee, released by the committee, not directly released by Jerome Powell. Quote is, the U.S. banking system is sound and resilient. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. The committee remains highly attentive to inflation risks. So the door's open. Well, I mean, let's talk about the front part of this. I think you're absolutely right. I think it's getting harder and harder to borrow. I mean, and that is the intention, right? And when the rate goes up, we want to try to make it harder for people to borrow.
But the latest event is making it even harder because, right, you end up with a kind of a spread between the 10-year treasury, which is kind of your risk-free asset, and your other rates, right? Because banks are just not lending, right? So you see the 10 years falling, and the 10 years falling because of expectation of further disinflation and the slowing of economic growth. I mean, the Fed projects, the FOMC projects that growth will stand at only 0.4% for 2023. I don't know how realistic that is, but we'll see. They're saying, look, the U.S. economy has slowed down considerably in the past year. It is likely to continue to slow down into 2023 below the long-run normal growth rate is their expectation. And so that will bring down the long-term interest rates. But in the short run, there's a little pain.
And of course, the Fed leaves the door open to potentially pull down even harder on this lever. This story's not going away. You and I are going to have an opportunity to talk about the Fed and inflation, for quarters to come. We'll keep a close eye on it and we'll check back in with it later. How about that?
That sounds great. We follow the stuff. It's important stuff.
For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.
Freedom and liberty are important to all of us. If you're looking for civil, intellectual conversations with those shaping the future of freedom, try the Future of Freedom podcast with me, Scott Bertram. We speak with leaders across the country in the greater conservative and libertarian movements. In-depth conversations about where the next intellectual battles will happen across the country. It's the Future of Freedom podcast. Find it at americastalking.com or wherever you get your podcasts.